Hello, my name is Wim Lievens, and in this little video I will present you my WL bars on the NinjaTrader8 platform. I will do this with a small presentation, and of course I will show you the tool later on the platform. As always, we have to start with the disclaimer. As you know, trading futures or CFDs, Forex, or sometimes other instruments on leverage have specific risks. And of course you have to know these risks, because sometimes you will trade with substantially more money than you have actually on your account. So please be careful. Now, if you have any questions regarding the risks and how to manage these risks, don't hesitate to contact me through my platform, my website, mytradeclass.com, and I will be more than happy to give you all the information you need regarding this. Now, these WL bars. Why trade with WL bars? WL bars are actually movement bars. They are a little bit like range bars, renko bars. I'm sure many people have heard of them. They actually are not defined by time, but they are defined by movement. Now, what I've done with these bars, I've made a combination between renko bars, range bars, and heikin-ashi bars. As you know, range bars are very detailed, only movement orientated. Renko are very clear, clarity, a lot of structure, and heikin-ashi very good to, or very easy to see trends, movements on a chart. Now what I've done, because all these bars have also some inconveniences, now I've tried to filter those out, and by combining those through, I honestly believe that I have the advantages of these three bars without having the inconveniences. And same principle applies. They are movement orientated, these bars. So that means that if you have big movements, you will see many candles. And if you have little movements, you will see few candles, which is exactly what I want, because I'm only interested to trade when there is movement, when there is an advantage, when there is an edge. So also, since all these bars have the same size, the risk rewards, the entries are a lot more precise. So that is another, I'll come to that later, is a very substantial advantage that you have trading with these candles. And then of course the turning points, or as we also know them as market structure highs, market structure lows, we will also use these tactics or these patterns with these candles, and we will call them triads. It's also a term which is known already. We've done exactly the same thing with this candle, but I will show this later on the trading platform. Few words regarding my trading philosophy. I've been sharing this now on the European market for the last 6-7 years with, I can say, substantial interest. I've always tried to keep things simple and structured. So I will share or show in real time how I do this, and why I use certain things and not other things. So in trying to give a structured approach to trading, and not seeing a vast amount of information, indicators, or I don't know what, and where people at the end of the day have no idea what to use or what not to use. And I try to keep things structured and simple, also trying to teach people how markets really function and what are the important things you should be looking at. Now, one of these issues is the price movements, price combinations with volume, in order to at least understand what is happening. I'm not saying you can predict the market. That would be that would be too much credit. But when something's happening and you know where the important price levels and volume levels are, you can actually understand what is happening, and that will give you substantial help in your trading and will benefit your trading. Succeeding in trading, well, I would say 20% is analysis and strategies you use, of course, which have to make sense. Money management is even more important. I would say that's 30%, and then of course combining these two and making sure you put them to work you execute them correctly, for which you need the discipline and you need to distance yourself on an emotional level. That's another 50%. But it goes without saying that without the analysis, strategies, and money management, if you don't have your head around this, if you don't have a grip on that, yeah, well, the 50% discipline will be very difficult. So it's like, a combination between these factors. And of course, last but not least, I still trade 3-4 hours a day, every day with my students, so people can see what I do, how I do it in real time. And as always, practice makes perfect. Now, I've written all this down finally, also in English, in my price movement course. It's 8 to 10 hours. I've explained all that. I also have some trading tools, whale bars. This one is one of these tools which I will present in the next few months. So this course has now been translated in English, has been a huge success in Europe, in other languages for the last 3-4 years. So if you have any questions, feel free to contact me through my website, My Trade Class. There's a whole English section now there. So if you have any questions, don't hesitate to contact me. The topics, well, I'm not gonna spend too much time on that. There's a lot of stuff in there, but what is very important to me, what I'm trying actually to do, is to avoid this. This. Many people have seen this, but still, in the beginning with many students, I see that they are struggling, and they are struggling with the markets. They're buying too late or at the wrong spots, and they we all know the buy low, sell high, and one way or another, many people seem to be struggling with that. And why is that? And that is something, and I'm sharing this screen or this page with you because I think it's a very important page, because many people are struggling with this. And why are we struggling so much? And that is because very often people are trading when they should not be trading when market conditions are not favorable, when they're not good, when you trade when there's no trend, or even sometimes trading against the trend. So also entering close to support and resistance areas. Once you know how to read the chart, you know where these areas are. You can see them. You can see them with volume profile. You can see them with previous day high lows. You can see them on pivot levels. So there are some areas you must know and avoid to trade against these levels, at least when there's not enough room to make money. One of the most difficult issues today, I think, is the fear of missing out syndrome. Is people, once they understand the strategies and the systems, well, they get very excited and they start trading too much. Over trading is an issue, and therefore there has to be a very structured system which defines, okay, now I have an edge, now I should be trading, or no, now I don't have this edge, so I do the most difficult thing for many people, which is I will not do anything. I won't trade. I will not enter the market, and that is very important. Late entries are another issue, very often linked to technical indicators, because people will not trade on price movement, but they will trade on indicator signals. Now, these indicator signals, it's a little bit of an optical trick there, but in the end of the day, if you look in the past, it seems like these indicators will give you an early signal, which very often is not the case. In reality, the price very often has moved too far already, and then the business model, the risk reward is not as good anymore. So very often combining indicators will lead to late entries, and is I think something that people should be aware of and try to avoid. Playing and gambling is something that I will see, that I do not see a lot anymore, and I'm very happy for it. I'm sure it still exists, but let's say that it's a good thing that it doesn't happen anymore, or not as much. Now this is something, and actually an image that I got a few years ago out of France, and it's a real analysis, and we can all laugh about it, but it shows that we are maybe over analyzing sometimes, and maybe we are using too much indicators, and I have nothing against indicators as such, because if you're used to using certain indicators, they can clarify an image, or they can facilitate an analysis, or show divergence if that's your strategy. That's not a problem. But what I'm trying to say is that one should be able to analyze a chart without indicators first, and seeing the important stuff that is on a naked chart. And once we are able to do that, you can, as far as I'm concerned, for the last 20% of the analysis, take one or the other indicator, which might show you a little more. But the problem is that this first part is sometimes forgotten, and we will analyze with indicators, which is a little bit dangerous, I think, because they can be pretty dogmatic in nature. Also, you can, put indicators in different categories. You have trend indicators, you have oscillators. They do not work in the same way. So ones will work when the trends are there, others will only work when there are no trends. So you should be able to define that first. So again, we should be able to see the big picture first, and then eventually use indicators. Because what are we looking for? We are looking for early trends, higher highs, higher lows, or vice versa, higher highs, higher lows again, or vice versa, which potentially could be the beginning of a new move. Now that is, in an ideal world, that's when we want to trade, because market could start a move, and early trends, young trends are ideal. Most people will make money in these markets. Most people will make money. The problem is that these markets, the sideways markets, which are, I would say, 65% of the time we have these kind of markets. If you're going to apply these trend strategies on these markets, you're going to lose, because it's going to go sideways. Now, I use the exponential moving average 20 to define whether I'm in a trend or in a sideways move. Very simple techniques I use to catch these areas early. I also believe that with the VL bars, these areas are a lot easier to recognize. Also, the Super 5 tool, which I will show in another video, was specially designed to stay the hell out of these markets. Okay, because then this is when we give back the money or more, and we don't get ahead with our accounts. So okay, so this is very important, avoiding these sideways markets. Now let's go back to the bars. What do you want to trade? You have different kind of bars or candles. Left you see the time, then you have volume or tick charts. Very good. Range bars. I used to trade with range bars for many years. Renko bars or heikin-ashi bars. So this, and there might be others. So there's quite a lot there already. I always had I was always struggling between range bars and heikin-ashi bars, and I tried to combine them for a few years, and I traded like that until I said, well, I should be able to combine these bars. And what I actually did was the last three on the right you see here, the range, the renko, and the heikin-ashi, I actually merged them into one bar. So combining the detail of the range bar, the clarity of the renko bar, and the sense of direction of the heikin-ashi bar, which actually gave me this, the VL bars, right? I will show this on the platform, how it looks, how you can make it look, and you know, I think it brings something new to the table. You can add this to any trading system you have. Here you have another. You look on the right. We've already discussed the why using these bars, but you can see on the right how they can look. You can change the colors. You can, you know, present them as bars. You can use the candles. You can change the colors. You can do it as I do sometimes. I will only use one color. So you know, there's a lot you can do. And as you all know, NinjaTrader is a very strong platform. So it works great. Good. Now, this we already discussed. These triads, actually these potential turning points, which are now built out of VL bars, and this works extremely well as entry signals or using them as stops. I will discuss this more in my Super 5 tool video, which is a little bit longer. This is something I wanted to show you, because this is something that in the beginning people might not understand. But the risk reward with these bars is normally not a lot better. Because why? Because I call it the ATR money management, average true range, which is the average movement a bar or a market makes in a certain amount of time. But since these candles are defined by movement and are not related with time, meaning every candle has exactly the same size, well, that's great. Because if you look at, for example, the triad here on the bottom, that would be a risk. Now, if I would look on my screen, that would be like 3 centimeter risk. You could put whatever amount of money against that that you like. But if you look at the movement, that movement is 5, 6, 7 times bigger. And that's where the real, I would say, the real advantage is. Will this happen always? No. I will talk about the business model in another video, but you have to understand that 20% of my trades are trades where I make at least 3 or 4 times this initial triad risk, and that is where the real money is. Okay, I'll talk about the business model in a later video, but I just want you to understand that in terms of risk reward and in terms of money management, using these type of candles give you a tremendous edge when you are trading. Now, I'm just gonna quickly show you how you can import these bars into NinjaTrader 8. Very simple, and then we'll go on the platform and I'll show you how to use them. Now, very simple. You open the platform and you go into your control center, which you can see here. You go into tools, import, and then you can import the file, which normally, if you decide to buy this, you can import this over the tools and section. So you just simply import it, and that's it. You also need to send me, and you will find this in help, I need to get your machine ID, and I will activate it. Yeah, hundreds of people in Europe already have done this. It works like a charm, works directly, very, very simple. You just, you get the file from me, you import it, you send me your machine ID, and that's it. It will work. Just the reason I'm showing this still in the PowerPoint presentation is because sometimes on the trading platform it can be a little can be small because my screens are quite big. You do this over data series or on a new chart, and you see that here type there is VL bars. The brick size is defined in tick value, not point value, but tick value. You choose whatever brick size you want. I'll explain to you how you can, for example, give you a few ideas how you could define the brick size. You choose the color, you click apply, OK, and you will see the VL bars. Yeah, I will show this to you on the platform now. Just hold on a second. So here we have the NinjaTrader. We'll say new, we'll say chart, and then we'll, for example, we'll take the Nasdaq, and we say, well, we want to see the Nasdaq with 8 ticks, and we're going to leave the colors bar width 3. Why not? We say OK, and we'll make this a little bigger for you so you can see this very clearly. And this is how it looks. Yeah? You see, very, very clear. The movement is a lot of structure in this chart. Of course, if you want to change this here, up here in the little window, you can set these VL bars according to any size you might like. If I say, all right, now I want to go down to 4, I click on 4. Well, it gets there's more excitement. I can go, it's a little bit too small. I can go to 10, and then now I have 10. I can, move it how I want. If I want to change how it looks, I go here. I could, for example, say, well, I want to see it like this. I could change the color on this. I could say, well, I go into data series. It's red and green. Well, I don't want that. I want it to be blue, all of it. Say, all right, blue, apply. And now I have one color. Yeah, so you can make them wider, you can make them smaller. What I'm trying to say to you is this will show price movement in a very simple and structured way. Okay, very important. Now, a last little trick to end this video. Here you see a chart of, this is 1 minute. This is 1 minute. And I just want you to look at one little tool on the bottom for now, which is the average true range. The way I teach my students is that whether you want to use the 1 minute or you want to use the 3 minute or the 5 minute or the 60 minute, it doesn't matter. You can always, if you say, well, Wim, I like to, look at the markets, I will look at the markets on a 5 minute and I try to trade on the 5 minutes. Fair, good. Take the 5 minutes, just put the ATR up there, see what the value of the ATR is. On average, it will change, of course, a little bit, but one knows his instruments after a while, so just try to see what that value is. And now listen very carefully. You take that value, you divide it by 2.53, and that is the size of your VL bar. Meaning that you can still trade your 5 minute chart, but you can now trade it with a bar which is substantially more precise, which gives you clearer vision on the instrument which is moving, more precise entry, and a substantially better money management. So you use your existing chart, which can be time orientated. You just, in order to see, put the ATR on there, average true range, see what that is, divide that by 2.53, and that is the size of your VL bar. That's it. It's as simple as that. So, if you want to see some more videos, and well, the amount of English videos is growing. There are like 300 videos on my YouTube channel now. It's all free of charge, and there will be more in English. You are more than happy to go and have a look. If you have any questions, don't hesitate to contact me. Here you have all my contact details. Again, thanks again for watching this video, and I hope to hear from you soon. Bye bye.